Hi, I'm Mike Stanton. It's August 5th. This is the BAM Weekly Muni Market Update. I'm here with Grant Dewey from BAM's Capital Markets Desk. Grant, thanks for being here this week. Relatively quiet week ahead of the big August unemployment report, and we got a big surprise. What did the numbers tell us?
Yeah, the fireworks were this morning. We had a huge beat on unemployment. The survey was looking for 250,000 after 380,000 or so the prior month, and but it actually came in 528,000 non-farm payroll increase for July. So, and they also revised upward the previous June report to 398,000. So. Unemployment rate ticked down for the first time in several months to a 3.5%. And the other big kind of news in there, I think, was the average hourly earnings rose to 0.5% month over month. So, that's beginning to compare more favorably to the inflation rate. And, speaking of which, we get CPI numbers next Wednesday, and those are expected to come in at 0.2% on the overall CPI and up 5% excluding food and energy. So again, sort of good news on the real wage front. But it really was a blowout employment number, and certainly hard to argue that we're in a recession. So the bond market took its cue, and the 10-year is back to a 285. And the 30 years back to a 308. So as you'd expect, the front end of the yield curve has seen the biggest adjustment with the 2-year at a 323. So we're seeing an inversion, which again would be expected.
And all that data kind of reinforces what we've been hearing from Fed people the last couple of weeks. That maybe the market had gotten a little bit ahead of itself, and they were still going to be raising interest rates for a foreseeable future to make sure inflation gets under control. Now it sounds like another 75 basis point hike might be back on the table.
It sure does. I think the market was expecting maybe a 50 basis points at the next meeting in September, and that's certainly. We'll see how CPI. The Fed sort of made a point of saying it's all going to be very data dependent, and we're still, about 7 weeks from the next Fed meeting. So, but as far as munis go, we continue to perform very well on that front. The relative strength can be attributed, mostly to supply demand factors that are evident in our market right now. We saw July was a very strong month for munis performance-wise, and that I think was driven a lot by the negative net issuance. So that it basically means that there's more bonds maturing and being called than there are new bonds being issued. So obviously that creates a tailwind for municipal prices, and you couple that with improving fund flows that we're seeing. You've got an asset class that has returned to kind of a haven of sorts. So, on the insurance front, it was a relatively quiet week. It was modest activity in the market, which is not atypical for August, and very little volatility, kind of ahead of the unemployment number. I think traders tend to sit on their hands a little bit, but today we're setting up for probably a little bit more volatility next week, and we'll get a clearer picture of what we can expect from the Fed in September.
And a couple of noteworthy transactions from the BAM insured calendar this week. The County of Merced, California, sold certificates of participation through KeyBank Capital Markets, $28 million transaction BAM insured, and two $17 million transactions, one for the city of Kingston, New York, that was priced by Baird, and one for the city of Windsor, Colorado, which was priced by Stifel. That was a wastewater bond. Looking ahead to this week, a slight uptick in expected volume. I think it was just around 4 billion this past week. We're looking at 4.8 coming up. Anything stand out to you on the calendar?
It's I think that these are typically months where we don't see a lot of supply, but July was the lowest month of new issue supply so far this year, and we'll see a little bit of an uptick in August. The fall, we typically will see a lot more. Fourth quarter, certainly a lot more primary issuance, but I would say that's been the big surprise. Very little taxable issuance, and tax-exempt issuance, is hanging in there, but we had large percentage of taxable issuance that just 2 years ago was almost 30, more than 30% of total supply. I think this year it's going to come in between 10 and 15.
Doing our small part to address that taxable number, the largest BAM insured deal for next week is Fond du Lac, Wisconsin. That's a $93 million taxable transaction. UBS is going to be pricing it, and Gia Calabrese from our East Region Public Finance Group is a BAM a BAM Credit Insights video coming up to talk about that transaction. So that is the largest thing on the calendar we're watching for next week. We'll be back to report on how it goes.
Yeah,
Thanks for your time, Grant.
Yeah, thanks a lot, Mike.
Talk soon.